Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Wednesday, March 4th, 2020. And our top story today, could cryptocurrency be a global macro hedge? And joining me now to discuss this and a lot more, Kevin Kelly. He's the co-founder and chief market strategist for Delphi Digital, a cryptocurrency research firm. Kevin, thanks for coming back on the program and joining us this morning.
Thanks for having me, Jeff.
Well, it's great to see you. And I want to dive into crypto, but let's just get your assessment of this market this volatility that we continue to experience, but we really experienced something last week.
Yeah, it's been pretty interesting. I mean, if you look at just financial markets in general, you had a really kind of divergent narrative that was starting to occur really since the coronavirus news. It's very much front and center right now. Started to kind of some of that news started to trickle in, middle of January towards late January, and then really obviously this month, things escalating and ramping up pretty quickly. But for a long time there, I mean, you had the bond market, which was saying one thing, which you had yields plummeting, which basically meant that treasury bonds were really getting bid up, and there were a lot of people demanding to hold safer assets. On the flip side, you had the stock market, which up until, the S&P 500 up until February 19th, actually had just put in its 25th all-time high, fresh all-time high in a matter of 60 days, right? So you had these two very divergent narratives going on. And what we finally saw last week was, the stock market and risk assets really caught up to what the bond market narrative is really telling everybody. And I think equity investors really started to reprice in some of this potential growing, I don't want to say necessarily systemic risk right now. It's a little bit too early to tell, but certainly, coronavirus and COVID-19 isn't something that appears to be going away. It appears actually the situation to be getting, quite a bit worse. And so now it's a matter of trying to figure out, what's the potential, economic fallout going to be from that? How is that actually going to affect, companies from their sales, profitability, profit margins, all that good stuff. I think analysts right now, it's a bit of a crapshoot, and what you're seeing is that rise in volatility, as you mentioned, because people are now trying to figure out, what the longer term outlook can be for, coronavirus in the aftermath. Is it going to be something temporary and transitory? Is it going to be something that permanently really kind of hits, GDP and globalization?
So is the coronavirus, and I do want to get to cryptocurrency because we have a really interesting conversation going around whether or not it's a safe haven. But I want to talk about, was the coronavirus merely just the catalyst? Because, we've been talking about this virus for, it seems like the last two month and a half, whatever it is. But is that really the thing that kind of took us over the precipice, so to speak? We've seen the market jump back yesterday, and we're filming this on a Tuesday morning, so just so folks know. But was that really just the catalyst to kind of push people over and say, let's sell? Let's take our
I think so. Yeah, I think so. I mean, bears were obviously just looking for an excuse to sell. And as I mentioned, the market just continued to climb higher and higher. Even though you weren't necessarily seeing, you were starting to see some, corporate earnings expectations pick up a bit. Guidance was coming in okay, but it wasn't like this big kind of euphoric, corporate profit growth that we were seeing that really was a fundamental catalyst to push stocks higher. Really, what we were seeing was valuation expansion, valuation multiple expansions, and price to earnings ratios, things of that nature. We're really starting to get bid up as you saw, the yield on fixed income alternatives continue to fall. Right, so it was a bit of a what we like to call the Tina trade, where there is no alternative, especially with U.S. stocks. And then again, I think coronavirus really was just kind of the catalyst here to really kind of send the market into at least a pretty sizable correction.
So let's talk about what I consider to be an alternative asset class right now, cryptocurrency, which is an area of expertise for you and the team. How has that performed over the last week to 2 weeks as this whole thing is percolating? Because of what I want to get to our conversation about potentially a safe haven.
Yeah, so it's interesting. So I'll be the first to say that Bitcoin, when it dipped down to, it went from around little over $10,000 per Bitcoin to 8,500 really quickly. And I'll be the first to say that, wasn't necessarily expecting a huge drop, especially since we got this kind of big risk off move. And as I mentioned, the worst, equity market returns last week since the 2008 financial crisis. So I think the size of that move certainly surprised us. Bitcoin and crypto assets in general, because again, the correlations are still very high among crypto assets. The crypto market in general has traded more kind of in this as a risk asset would in some of these times of peak volatility. And it's interesting because we've talked on this show countless times about how Bitcoin had started to at least garner some of this safe haven narrative from not just crypto investors but global macro investors, people who really kind of potentially understand what the long-term value proposition of something like Bitcoin is. It started to trade a bit as kind of this high beta play on physical gold, for example. And what we saw over the last couple weeks or so is a breakdown in some of those correlations, right? And I think one of the reasons why is that the incremental buyer between Bitcoin and gold is still very, very different. But B, you even saw treasuries were really the asset class that was up last week. Even gold, initially rallied, but saw took some losses and sold off a bit because I think it was more kind of this liquidity selling more so than the underlying assets themselves. And what I mean by that is, last week when stocks are basically in free fall, people are looking across their portfolio and they're kind of panic selling out of multiple assets and different things that they can actually get some liquidity on, and kind of pumping that into treasuries, which are still regarded as kind of the safest asset or asset class out there. So it wasn't something that was just limited to necessarily Bitcoin. I don't think it necessarily breaks the potential macro hedge narrative, but certainly was a little unexpected in terms of the size, I think, of its recent drawdown.
Yeah, well, Kevin, I'm going to hold you over. When we come back, we're going to talk to Kevin more about this potential for a global macro hedge in cryptocurrency. So stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. We're talking to Kevin Kelly. He's the Chief Market Strategist and co-founder of Delphi Digital, a cryptocurrency research firm. Kevin, thanks so much for sticking around this morning.
Thanks for having me back.
Hey, so let's jump right in. So we talked in the previous segment about the potential for using crypto as a global macro hedge. But one of the things that many people who are watching the program may not know is that there's a fixed amount of cryptocurrency. And like gold, that's potential for a safe haven.
Yeah, no, that's one of the big kind of key narratives, especially around Bitcoin, this idea of digital scarcity, right? And being able to provably know what the end supply is going to be. And if you wanted to, for example, you could project out, the issuance of Bitcoin and the issuance schedule, over the next 100 years if you wanted to. I think it is important and a caveat to note that, similar to, looking at, the equity markets or other, traditional asset classes, even within the crypto asset bucket, there's still, a lot of nuance and a lot of kind of different sectors, so to speak, of the digital asset market. And it's not just Bitcoin and everything else trying to be Bitcoin. And the reason it's important to, distinguish between those is depending on what that digital asset or that network is trying to do. Sometimes there is some variance in terms of what the supply schedules are, whether they're kind of more front loaded and you see a lot of issuance up front. There's also certain crypto assets and projects that are still a bit more, centralized than something like Bitcoin. And so those issuance schedules are still being worked out. A lot of people are kind of focusing more so on the long-term, value potential driver of this digital scarcity narrative that's growing, especially in a world of fiat abundance, like we've talked about. But it is important to note that there are some pretty drastic differences between the supply schedules, I guess you'd say, between crypto assets.
Kevin, China is one of the sovereigns that is very interested in establishing a national cryptocurrency. And it's also using the blockchain, which is the underlying technology, I think, to help detect or monitor or something around the Wuhan virus. What do you make of the impact of China's goal because of all this that's going on? And also, what do you make about the use of the underlying technology of blockchain to help in this detection?
Yeah, I think it's a little bit difficult because, I think one of the other, common misunderstandings is that it sounds like a situation where, blockchain solves all, but that's great on paper. The frank reality is that, depending on what the information is or the data that's going into, those detection processes, and we know, taking right now the total case numbers and even potentially the amount of deaths that have occurred, within China because of the coronavirus, we take those with a grain of salt, right? Because there's just a lot of data out there that says, the numbers have to be drastically higher. So I think, it's one of those concept of, kind of garbage in, garbage out, unless the actual underlying processes in place for detection, are trusted, right? And I think what's important to note here too is that you're starting to see, citizens not only in China but in places like Iran too start to really kind of lose faith in the institutions and the governments that oversee them, especially when it comes to something like this outbreak, and really kind of trying to downplay the effects of it, unless you have really good data going into this and that detection period. Using blockchain technology as kind of the underlying foundation for that isn't necessary or really that important.
Yeah, because transparency is one of the great things about the blockchain, right? I mean, the underlying technology is that you have the ability to provide a transaction, categorized by transaction, but also you have complete transparency. And anybody who is investing or buying something wants that, or getting data wants that transparency. Then they don't want corruptible data. But I guess you're right that if garbage is going in and we're getting garbage out, that even if it's transparent, we're not going to get the right information.
Right, and depending on how they're using the underlying technology and who has kind of this right access to the blockchain. Again, something like Bitcoin, and I use that example because it is the most decentralized. The immutability aspect is also really important. And here, if you have these kind of centralized entities that are controlling or have control over the blockchain that they're using for this, it just kind of adds insult to injury because, again, that data is not going to be necessarily immutable. They could always go back in and rewrite a certain block. So again, I think it's one of those kind of use cases where it sounds great on paper, but when it comes to actual implementations, it's not the best idea.
Last question. We did a story last week on a cryptocurrency scam. Really interesting. I don't know if you saw this. $147 million. Quite a few people were bilked by this gentleman who ran multiple marketing companies. Is that just a case of like a typical fraud? I mean, just people like a phishing fraud, or someone just being charismatic and being a liar, basically. I mean, it's not fundamentally. You have a fundamental technology that's fundamentally sound, but is that really just someone just being dishonest?
Yeah, it's tough to say. I mean, it's certainly not something that's solely due to the crypto markets, right? But I do think the opportunity here is pretty ripe for fraud and deception, because again, you can kind of sell this either a pipe dream or sell the complexity that surrounds crypto and blockchain. And obviously, when people start talking about things like even the concept of custody and custodying your own assets is something that's pretty foreign to a lot of investors. So it's easy to see, unfortunately, how people could get kind of caught up in a trap like that. But again, I don't think it's anything that's necessarily just native to crypto.
Yeah, and just to be clear, I mean, Kevin, you're dealing with institutions that have institutional investors, right? So they have deep due diligence teams that go in to understand the cryptocurrency marketplace, the blockchain, the underlying technology. For the average investor out there, mom and pop, watching the program, I mean, cryptocurrency probably is not ready for prime time from their perspective, right? I mean, you need to be having an emergency savings, right? You need $1,000 in emergency savings, putting money in your 401k, right? I mean, what we're talking about is really those core institutional investors who are really looking and digging into crypto.
Yeah, absolutely. And I mean, even for your average investor, again, those things are front and center and most important for sure, and definitely prioritize. If you have some, let's say, disposable income left over that you're going to put into savings, and you have a little bit extra that you want to put into something that, again, it's important to note that crypto and Bitcoin, still a risky asset class and nascent technology. Putting 1-2% of your portfolio, and that, again, the asymmetric upside to this asset class is pretty massive, especially when you look at the expected returns across other asset classes. But again, it's not something that you would obviously, put all your eggs in the crypto basket for sure.
Yeah. Well, Kevin, always a pleasure talking with you, getting your perspective on markets and also cryptocurrency. You're like the Lamar Jackson of investing, right? I'm a Ravens fan, so you're a dual threat. Kevin, always a pleasure talking with you. Enjoy the rest of your week, and we'll talk to you very soon.
Appreciate it, Jeff. Have a good one.
And that wraps up this episode of BRN AM. Hey, have a financial topic or someone of interest that you think we should talk to? Drop us a line. And don't forget, for all the news in retirement markets, technology, personal finance, and so much more, check out today's edition of The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Keep on saving, and don't forget, roll with the changes.
Attention! The Centers for Medicare and Medicaid Services has officially authorized new benefits that Medicare Advantage plans may include. To get the benefits you deserve, you can call the Medicare Coverage Helpline.
Hi, I'm Joe Namath. If you're on Medicare, this is important information. I called the Medicare Coverage Helpline and they instantly looked up my coverage. In this one simple call, they offered to enroll me in a plan that includes rides to medical appointments, private home aides, doctors and nurses' visits by telephone, and even home-delivered meals. The plan also includes dental, vision, hearing, and prescription drug coverage, all at no additional cost.
Don't delay. Call to see if the new benefits are available in your area.
Call the number on your screen now. It's free.
Call 1-800-757-1451. That's 1-800-757-1451.